Hey everybody, Courtney Smith here with our June 21st edition of Wall Street Winners since 1995. Well, there's a lot of nuances that happened this last week, so pay very close attention. I'm going to actually go slower than I normally do. Normally, I like to go real fast. I like to get this thing over in a New York second. But today, we're going to take our time because there's a lot of nuances. Be sure to listen to everything because I'm going to say something, then I'm going to say the opposite of it, and then tie it all together. So keep watching. Okay, so we saw the S&P come down pretty hard. It's not really a big deal, but look at the purple predictor came down very hard. So we're just 4 days from all-time highs, so this is certainly not a bear market in the S&P. Let's take a look over here. The Dow, on the other hand, look, I drew a horizontal blue line there. It broke that line. It failed to make new highs a week ago or 2 weeks ago. So this is what's called a failure top. And what it means is we should see about 2,000 Dow points on the downside, maybe 3,000. Let's say 3,000 Dow points. So the objective here would be about 30,000. If we look at the red box, we see that selling pressure skyrocketed. Now, the interesting thing is if we were down again on Monday, it would actually reach an extremely high level. Notice where the peak of the red line is. It's up around 35. Now draw your eye across the rest of the chart and you can see there's only a few times when we get above 35 and they don't last long. In other words, we get down to 30,000 and then maybe that's the end. Not 30,000. Let me just look here. Let's say, no, around 31.5. 31.5 should be the downside objective. So we get down to 31.5. We've got too much selling pressure. We've run out of people to sell, and the market snaps back. That's what the Dow is telling us. In addition, look at the green line. Now, excuse me, this is the RSI. It can get down below this green line, but it doesn't usually stay very long. You can see it doesn't get above the 70 line for very long, and it doesn't get below the 30 line very long either. It means it's oversold. So there's a lot of reasons to believe there's not a lot of downside here on the Dow. But the NASDAQ moved higher, and the purple predictor is quite bullish. So what we're seeing is after the rotation that we've been playing now for months, and they're calling it the reflation trade, which is basically saying that massive stimulus, fiscal and monetary, is bringing back inflation, and therefore we want to be long financials, materials, agricultures, things like that. We don't want any of that boring growth stock stuff that's in the NASDAQ. But over the last several days, they've completely reversed that. They now believe that they want to hide out in growth stocks. So the NASDAQ's still in a bull market, even though the Dow and the S&P, which are more interest rate sensitive, just took a dive. Not a big dive, but a dive. Now we're going to keep on going, okay? There's more nuances here, so pay very close attention. All right, I'm going to tell you my opinion. All right, seasonality for stocks, neutral. Bullish for Utes. They did break up here. We didn't get long, and then they went right back down to the old support. So, well, we'll see what happens. Now, one of the things is that I told you we expected the market to sell off. Our seasonality here, we use StockTradersAlmanac.com. I highly recommend them. You can see that every one of the seasonal periods, it didn't matter what type you used, it was going to be going down. And it looks like it could go down all the way into the early part of July. Then we get a rally back up again. Then we get a bigger drop down into the lows in September. And so far this year, the seasonality has worked perfectly. So look for the market seasonally to remain under pressure. Now, in this case, we're talking about the S&P 500. We're not talking about the NASDAQ. Another thing that had a big change here was money went out of the stock market. When they sold the stock market, they went over and they bought bonds. So this is taking cash out. The stock market risk indicator, though, I find very interesting. It didn't go anywhere. They said, okay, if we're going to stay in stocks, we're going to stay in risky stocks. But you know what? We'd rather be in bonds. Look at what happened with global shares, man. They really dropped a lot more than in the U.S. So you can see here, they had been doing better than the U.S. Now they're doing worse than the U.S., but still not oversold. Look at the green line here. We haven't got down to the 30 level. That's this line, this green line down here. So it's not oversold. So they've got more to go on the downside. The yield curve keeps moving in a more negative direction. This is not good for the stock market. Now, it hasn't gotten to any crisis point. It's just kind of this gnawing background negativity. Bonds, of course, took off, as I told you I thought that they would, but I think that this rally is going to be short-lived. We're now, look at the little green line, we're now overbought. Purple predictor is not really following. I mean, in fact, it made a lower low here just 3 days ago. It made a lower low. So the purple predictor is neutral, but compared to the price action, it's not that good. So look for bonds to stop rallying here very soon. Our key indicators. Let's take a look at them. The green line, which it gets kind of lost in here, but the green line is Treasury yields. You can see CRB started to come down. No big deal, but it did come down. Gold came down quite a bit. And the blue line is Treasury notes in Germany. They came down as well. So U.S. Treasuries came down. Whoa, the dollar took off. Obviously, euro versus dollar was the key here, not dollar yen, but euro versus dollar just took off. I told you that we were putting in a little bit of a low in here. Obviously, I didn't expect it to skyrocket like this. Once again, it's about to end. This rally is about to end. Over here, we see gold, the opposite of the euro, obviously, of the dollar. And you can see the little green line back here. That means we've gotten back to oversold. And once again, it doesn't stay down there very long, okay? So I think this bear move is about over. But what it means is we're just in a gigantic trading range. Boring. Okay, top indicator, bearish. Bottom indicator, bearish. Middle one, kind of neutral, but the late action here is bearish as well. So we can't be bullish there at all. Crude oil, not down much at all. Because, now, and I'm going to stop here for a second. So what we saw was the Fed did not come out and raise interest rates. The Fed came out and said they're talking about 2 rate hikes in 2023, 2 years from now. So I'm looking at that and I'm saying, is that a cause for a bear market? No, that's a cause for a little quick correction. But crude oil is actually in the real world today. The talking about 2023, the stock market was discounting something that may happen in 2 years. So that can't be a long-lived bear market. Now, sometimes a minor factor can be the triggering factor for a major bear market, but the conditions are not in place for a bear market. So we're not going to see a bear market. I told you over the last several weeks that we would see some type of a correction. I said short term, maybe 2 to 5%. I said in August, September, we might see as much as 10%. Okay? But we're not going into a bear market, which is considered a 20% down move. That's going to probably come in 2022, but not 2021. Oil is in the real world. So they're not looking at what's going to happen about people talking about 2023. They're looking at, do you want barrels of oil now? So it dropped one day and then right back up the next day. Look for crude oil to continue to do well. Once again, go back and watch our Biden Boom webinars and our oil webinars for more details on all of this. Bitcoin will continue. It's going to break these lows here. Pretty certain here. And if they do, we're going to start to see around 15,000 again on this break. We're going to see this break. It's just above 30,000. We'll probably see it get down to 15,000 on this break. So that would be a 75% move down on Bitcoin. Holy moly. All right, freebies, you know we love having you here. Fully paid on members, hold on just a second. Now, freebies, I talked about a second ago about the profit from the price of oil. I did a webinar. Go to our YouTube channel, watch that video to make money in the oil market. More importantly, to put all of this move down in perspective, go over and to YouTube and watch the Biden boom bust, okay? Because that'll give you exactly what's going on in the market today. And if you subscribe to Wall Street Winners, not just the freebie version, but if you actually paid money, I'm going to send you the Biden boom bust special report where I give you stocks, the specific stocks that I'm buying right now to take advantage of the Biden boom bust. That's a great bonus. That pays for your subscription right there.